Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, March 13th at the close. Well, Wall Street staged a rocket rally in the waning moments of the session today after U.S. President Donald Trump declared a national emergency to combat the rapidly spreading coronavirus. In a volatile session, all three main indexes jumped more than 6% in early trading. Then they fell to a small gain of about 0.5% by the middle of the day. Then in the afternoon, the market rallied right before the close as, again, President Trump made the announcement with industry leaders of about $50 billion in federal aid to fight the disease. And so on that note, and on quite a few weeks of very heavy volatility here, let's go on and look at three charts that could give us some insight into the week to come. Now, first of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, as you can see here, the SPY closed out the week at about $269.32. Since the all-time closing high up here, all-time closing high February 19th at $338.34, the SPY is now 20% off of its highs. So we're legally in bear market territory when it falls below the 20% mark. We're legally in correction territory when it falls below the 10% mark. So we're right on the border here. Right on the border of bear market territory and something that's considered to be a little more positive, which is correction territory. So today the SPY opened at $263.09 right here, fell to an intraday low of $248.52, then rallied to an intraday high up here at $271.45, and as we said, it closed at $269.32. So now we have to look here for more support and resistance, and that's how we kind of get our levels for what we think could happen when price moves next, which of course, quite honestly, is anybody's guess. However, let's look down here at for support on the SPY. We can use Thursday's low and today's low, and that's down at about 248. So let's draw a line there. So that's potential support, as for 2 days in a row, buyers came in at this level. Now, if we look up here, we can see overhead resistance comes in at $271. That's about as far as the SPY could go up today. And you can see that from earlier in the week, it used this as support. What was support, 271, price fell below it, and that has now become resistance. So we also have here more resistance up to about 284 right here, 285, and then above up here about 289. We have more resistance here, which means that if the S&P 500 SPDR moves up to these levels, it could find more resistance here from buyers, prior buyers who want to sell and hope to get out at some point with a little more money. So it's anybody's guess here if we can have a V-shaped recovery. I would say that in my experience looking at the price downtrend that we had here, that this is going to be a tough move to make a V-shaped recovery. I suspect that if, and the big question is if here, if the SPY can stay above 248, if it can do that, if it can stay above 248 or above 250, about 2,500 on the S&P 500 itself, if it can do so in the next week, then we could maybe start to build a base here. Now, as I wrote on Twitter Thursday, the capitulation of the SPY here on Thursday's down move, the capitulation, and we really saw that may have helped to exhaust many of the sellers. And it may, and the operative word here is may, of course, it may help to invite some buyers back in the market. Many stocks, of course, are certainly trading at 52-week lows, and some very, very good companies are doing so. So the operative word is may here. That's why I want to put in the support level at 248. Should the SPY fall below that, then maybe we look for a little more downside here. Now, what I'd like you all to remember when the SPY starts moving up here, and a lot of these stocks start moving up here, it's a good thing indeed. And I know we all want to buy the bottom and sell the top, and I will tell you that that isn't the easiest thing in the world to do, nor is it necessary. What we want to do here is to protect our capital at all times, and we want to remember that cash is a position. It does not hurt here, in my opinion, to sit and watch at least for a few more days. But we want to make sure here again that 248 is the line here. Don't want to get in here, buy a lot of stocks, and then see the market fall again. But the capitulation, yes, on Thursday might have helped. And so I'm going to sit here calmly to a great deal. I'm going to keep my fingers, my mittens off the keyboard. However, we can see the RSI holding here at about 36. We can see that. We do see a great deal of volume in the market. That could, a lot of it be, of course it was selling volume, and then yesterday some buying volume. Remember, please, with me that when we get a day like we did today at the end, a lot of it is short covering. So that's not a bad thing. It's fine. The shorts are covering their position because they're losing money when price moves higher. There certainly are some buyers moving in here now thinking they've got the lowest price, and maybe they do. So when you have the buyers buying and you have the short sellers covering, you usually get a very dramatic upswing in whatever it applies to, whatever asset you're talking about. Just know that if, and none of us know what's going to happen, but if a lot more buyers don't come into the market in the next week or two, then we'll probably have kind of a basing action here. If we get as many buyers as we do sellers, we should get a sideways movement here, and that's assuming that price doesn't fall down and move below this $248 support line. So if we can stay here for a little while, even trade in a range, maybe build a base, that will be optimal. If price shoots a little higher, that's fine too. What we don't want to see is the SPY fall below 248. So I'm not anxious to jump in the market here. I may wait a little bit. If I don't get the bottom, I'm good with that. I've been around long enough. I know that markets can stay volatile for quite a while. So let's be prudent, let's be careful, let's protect our capital at all times. And on that note, we will go on to our next chart. Now, our next chart today is a daily chart of the Invesco QQQ ETF. As you all know, this represents the Nasdaq 100, very important index in the stock market. Now, today the QQQ, with a similar pattern to the SPY, closed at $192.34. Now, we know that it made a new all-time closing high on February 19th at $236.98. Now, this Thursday, right here, it made a relative low down at $177.32. Now, that's down 25% from its highs, and that's solidly in bear market territory. Today, however, the QQQ, today Friday, rallied with the SPY. It rebounded here and closed up at $192.34, and that is down about 19% from its highs. So legally, we're back in correction territory. Legally, the SPY is no longer in bear market territory, and I suppose we have a little bit of angst relief from that. So as long as it can stay here, it's squeaking into correction territory, which is better than not. So we can draw new price support at today and Thursday's low down at $177. So I'm going to draw a line here. We have resistance at today's highs up around 100. and 95, 94, 95, and then we have more resistance up here at the 200-day moving average now at $199.55. You can call it 200 if you want and make it even. So support here down at 177, resistance up here at 192, 195, 199. We'll have to see if the big stocks that do push the QQQ around, if these big tech momentum companies, and we're talking like Google, Alphabet, I'm sorry, that's the same thing, Alphabet, Amazon, Facebook, Netflix, Apple, Intel, Microsoft, can they bring the QQQ back up higher again? I suspect there'll be some volatility in the coming week here, moving back and forth with the bears and the bulls probably duking it out here. So I would be very careful. Now, again, we're still in correction territory here, so please take a lot of thought before you enter into any high momentum stocks, as they have the ability to move up and down in the biggest price ranges of the day. Maybe if you decide to do so, maybe you initially buy very small share size, and I would think that you would want to enter hard stops with your broker. So just be cautious here, and again, remember please that cash is a position and that there's no need to rush. I think we're going to have more opportunities. Okay, our last chart today is the Healthcare Select Sector SPDR ETF, the XLV. The top components in this are Johnson & Johnson, United Health, Merck, Pfizer, Abbott. All good companies, all have sold off. Now, one would think that healthcare is going to be one of the most important places to look here in incoming months, certainly, because that's what we'll need the most of. The XLV today closed at $90.66 when everything was finally in. That's down about 15% from its January 22nd back here, January 22nd all-time closing high at $105.08. Now we can note here that the XLV actually consolidated for much of the year here between about 86 all told and about 90, 93. It did consolidate here. It did go back and forth. It actually made a triangle that's pretty easy to see here. And then it broke out of that triangle, moved in a really good uptrend, then fell down, of course, in the middle of January, jumped back up, made a lower high in February. Lower highs, when we've got a big move like this and then we get a lower high, that's telling you that traders are not willing to pay up for this particular ETF anymore. And if it starts to roll over, there's a pretty good chance it may go lower for a little while. Now that's what happened. We had a double top here, and then of course price fell hard. Now we see it moved up here dramatically after falling into the end of February because, of course, the healthcare stocks are the ones that do look to profit in the circumstances we're in right now. So it moved up dramatically back up to 100, then fell, established support level at about 90, fell a lot lower this past Thursday with most all stocks did, but jumped up again pretty dramatically today, again ending the day at 90.66. Now, what I'm going to do here, if the market starts to behave itself and calm down a little in the coming week, and there's certainly not much to make me think that's going to happen, but if it does start to trade in a little range here, move back and forth, I may, and the operative word is may, I may buy a small position, very small, of the XLV. I'm going to watch it. I am going to place prior price support here. I'm going to place at $84, and I'm going to place my initial stop here. I'm going to give it a wide berth to start with. I'll place my initial stop on my very small position as a close below $84. Now, if it can remain higher here, move up to 91 and back into this range here, naturally I'll raise my stop up probably to 87, 88. I may add a tiny bit to my position if it is able in coming weeks to move over 94, but it's going to have to prove a lot to me to do so. So if the market gets cranky again on negative news, I may exit the trade before it reaches my stop. So on that particular idea, we'll go on now to the coming week's economic reports. But first, because the market has caused so many good stocks to fall dramatically, we are offering our popular online training, How to Bottom Fish Like a Pro, at a 20% discount, and it is available now. You can learn how to buy low and sell high. You can discover my simple and effective approach to the market that gives you the tools to profit in the coming weeks and months. And it can make your trades more profitable from now on. So if you want to prepare for the moment that this stock market starts to bottom out, starts to become much more orderly, and if you want clarity and know how then to get into some of these stocks with the right patterns, the right entries, check out the link on this screen or simply click on the button below, How to Bottom Fish Like a Pro. I think you'll find it to be very beneficial to your trades from now on. Now for the coming week's economic reports, on Monday we have the Empire State Manufacturing. Tuesday we have retail sales. Wednesday we have housing starts, building permits, crude oil inventories. Also, Wednesday is a very important day because we're going to have the FOMC rate decision, and that could cause the market to move up or down again at a pretty volatile point. So please pay attention to the market on Wednesday afternoon around 2 p.m. Eastern. On Thursday, we'll have jobless claims, the Philly Fed, and natural gas inventories. And on Friday, we'll have existing home sales. So again, this is the perfect time to profit from the market sell-off. I always like to prepare before going into new circumstances, and this is certainly one good way to do it. You can learn how to bottom fish like a pro easily and successfully and get this already low price training right now at a 20% discount. So to check it out, just click on the button below. Please be careful out there. Keep green on your screen. Until next week, I'm Toni Turner, and this is The Market Now.